A sense of capital.
Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Life Earnings. Your host of today, as always, is Julian. I'm very glad to have you in, guys. And just before starting, let me quickly check if the stream is working well. Yes, looks in good shape, or at least in sufficient shape compared to the quality I'm on average delivering for you guys. Okay, so take me off the in-ear plugs and start with the stuff. Okay, guys, what we will talk today, we will back the earnings results Q2 quarter, the second quarter of 2025 of gambling.com, a company who is doing performance marketing in the iGaming and online sports betting world. So basically, they make the bridge, the transfer point, the connection between online casinos, sports betting platforms, and people who like to gamble online and to bet online, for instance, on sports or fantasy. However, as always, a quick disclaimer. In the upcoming minutes, this will not be financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. So guys, that's extremely important. Make always sure you check the data by yourself. Maybe I'm a little bit not focused or do some typos, type in the wrong numbers and results are not correct. So check this out by yourself. And of course, do always your own due diligence and make your own decisions when investing. I hope everything is working and performing well, because it's quite warm here in Germany. And my hardware is not prepared for this. Even my mental hardware maybe not, but definitely the hardware of my computer might touch some limitations. But let's see. However, guys, the reason why I was a bit late, let's say a bit, is basically they postponed or rescheduled the earnings release point in time, and I honestly thought they will launch and publicate the results earlier, but wasn't the case. And then there was so much information in it that first I want to enter those information relaxed in my tool, and afterwards at least read a bit about what was going on. So I don't want to spoil it at the moment, but I think we just jump in a moment. But before we jump into the results, we already jumped in. I just want to quickly show what gambling.com is doing. So basically it's the same like Airbnb, like all these platforms, like booking.com and many more, where basically end users find platforms, businesses to do their stuff. In this case, they want to gamble and they want to bet on sports. So there are different platforms involved, like the OG legacy one, gambling.com. That's the reason why the company is named gambling.com. You can see here that's the German version. The different providers of, in this case, online casinos, different incentives, bonuses when you join through their button, and you can compare, what kind of payment options you got as a user, what are the payment conditions, are they certified, and even further information are added to it. And next to it we have even some news, let's say content about gaming, primarily about sports betting, but even about, or sports in general, but even about other stuff. So that's gambling.com, and there are different ones like this. They actually operate of more than 50 websites like this. So we have here casinos.com, Bonus Finder, very similar like this. Then we have here one which is more focused on sports betting. So we have here some sports betting websites and providers and platforms. And then we have a little bit more special ones, a little bit more subscription, solid income sourced ones, which is RotoWire. So here you get information about sports, fantasy sports or other sports, rookies, whatsoever, drafts, picks, I have no clue. I'm not into this fantasy sports, but you can see here some content about football, American football, for instance. Then I have another one here, which was as well an acquisition like RotoWire. So OddsJam is as well provides superior services for people who want to bet on sports. Yeah, comparing different how you call this. Wait. Quote? A quote is quote. This different rates, I think. Rates is the right word. So different rates on different websites, for instance, for the same bet. And then by comparing those rates, you can make some money, for instance. Yeah, so basically some, basically like this. And then we have as well another part of this optic holding business. So this is B2B, but we have as well B2C. So you can see leading sports betting data provider. So they as well with this service, they provide sport betting websites, the data they need to provide their betting business basically. And next to this, they're running a few apps. You can see RotoWire Net News Center, 15,000 plus downloads. It seems like a quote legacy one if you see here the design, if you ask me. Then we have another one, RotoWire Picks, player props. So basically I think it's about picking of new sports stars, new players at the beginning of the season, like in American football again. Then we have RotoWire Football Draft Kit. Yeah, you can see it here as well. It's very new. I think it was launched within the past 30 days, I think. And already has 1,000 downloads. Let's say already, but I was definitely screening it in the past weeks, observing it, and was a little bit concerned when it was just 100 and now it just crossed 1,000, I think yesterday or something like this. I'm very happy to see this actually. And even OddsJam has of course an app, like you can see here, 10,000 plus downloads. And then we have on top of this different YouTube channels, like for instance gambling.com. I'm actually not that sure about how high class the content is. It's not my world, but at least they're doing something, yeah, on a quite regular base. And as well another YouTube channel you can see here with this time 3,000 subscribers. And even and actually RotoWire, they rebranded it, so that's the reason why it looked like this and like this in the past, and now it looks like this. That's the rebranding. I think management from gambling.com, the top management, getting a little bit more active, proactive here, and they haven't been that satisfied with the so far results of this acquisition. However, so we have this YouTube channels and another one of OddsJam with actually almost 130,000 subscribers. Not sure how bangy, how good, how professional this content is. Really, I have no clue. I watched a few minutes of a video and I decided to switch off. Maybe not a good decision as an investor, but however, that was my decision. Yes, and actually last but not least, what I want to share is what I'm doing is I'm using Google Trends and use for different kind of keywords, like in this case online casino, and you can see here the development globally of the past 5 years, and it's really heating up, especially in the past months. You can see it here since beginning of this year. Crazy. Not sure if it's in the oh wait, not sure if you have seen it. Not sure if it's in the areas where gambling.com is active in, but basically they are separated across the world. Main focus Northern America, UK, and Ireland, yeah, and a bit rest of the world, let's say it like this. But I think they have even a platform, a comparison platform, so a performance marketing platform in Brazil, yeah. However, so you can see how this iGaming, let's say it like this, keywords is developing. And here we have entered online sports betting, and you can see that is actually quite stable, increasing a bit, but you can see it had definitely some peaks in the past. That's hard for me to judge about, but it looks more or less not that crazy volatile. Okay guys, grant me a zip and then we will start with the results. Even you can see them already here. And as always, guys, I have entered them into the prepared Excel sheet. So top line growth, bottom line growth, the outlook, and different company specific, business specific details and non-specific specific details, everything already entered and prepared for you guys, so it's a little bit more convenient to screen through them and work through them. But yes, I think we should just start right now. Okay, and honestly, guys, I was a bit confused, was really not sure what is going on with the results. And I think we really need to take a bit time to read through the press release together, at least superficially go through it. But first of all, we definitely set the focus on the numbers. And we start with the top line growth, and you can see, I mean, forecast was roughly 39 million. They beat it by 0.6 million US dollars. So my target actually was 42 million. Why? I wanted to see, like past year Q1 to Q2, that they increase it by an absolute number of 1.3 million US dollars. They didn't make it happen. Actually, you can see here it's minus 1 million US dollars roughly. Not that bad. I mean, in the end, you should not forget, gambling.com is acquiring so many new businesses, and they start to reactivate them, accelerate them, and whatever they're doing with all these businesses. And it's always very difficult, as you can see here with this growth scale, to compare it to the past year. Of course, I mean, again, on the first glance, roughly 30% year-on-year growth in revenue, as you can see here, looks delicious. But don't forget that what I've showed you recently, the odds jam and optic odds acquisition, is now fully active in this. And I mean, it was a huge acquisition, not a small one. I think 120 million US dollars and some potential incentive fees if they reach a certain level of, I think, adjusted EBITDA. Yeah, so however, so I wanted to see more. It is less. It's still a small beat. Not sure how I should think about this. Actually, I think my target was too high, and I never did this. And I am not doing this because I'm getting soft mentally and I just want to provide them a good result. But I think I was actually too high. I was simply too high with this beat because, again, there are some effects existing. However, I stay solid and forget what I've told you. I put it in the negative. Maybe it's not that crazy negative. Actually, they still covered the forecast, and they are not popular for big beats or whatsoever. Even if Q2 2024, they definitely achieved a beat of roughly 10% in terms of revenue. Yeah, but it's still not that crazy bad. On the other hand, for me, it's kind of a miss because my targets are always a bit higher than the public forecasts, and yeah, so I keep it like this. And now we come to the earnings per share, and actually, honestly, I'm not 100% sure if it's correct, but I checked it already on different websites. I calculated by myself, as you can see here, adjust net income and weighted average shares outstanding diluted, and that is the result. And it's the same result what is stated by gambling.com actually, so I assume at least it's correct. Not 100% sure, but I assume it's correct. And that actually would be a very strong beat, no doubt about this. I mean, it's, yes, again, it's weaker than past quarter, but there's always some kind of seasonality existing. And considering this, very strong beat. It's very strong beat. And this is the reason why I here give definitely positive green rating. And so far, you can see it here, if we do a blend out of top and bottom line growth, whereby for me always more important is revenue growth. However, if we do a blend, the mix out of it, it's for me neutral. neutral. And this is, I can live very well with this, let's say it like this. And now we go really into this crazy details. You have it here, I think, should work out. And first of all, we screen a bit more detailed the different sources of revenue, let's say it like this. They have different angles how they tackle this and set the spotlight on this. And first we start here with the different major income sources. I mean, performance marketing, again, these are wait, I can share it one more time. The legacy business, more or less, this roughly 50 websites, gambling.com, casinos, bonus finder, free bets, yeah, this kind of stuff. That is the performance marketing, and basically it consists out of two fees what they charge their online platform casinos, sport betting providers. First of all, it's let me check it. It's CPA, I think. Yes, cost per acquisition. So it's an initial and one-time effect per new user, which they connected to a platform. They get a certain amount of money. And the other one is how they call it? Revenue share. Yeah. So basically, when those users, there's new players, new gamblers, whatever, if they're using the services of the platform, like for DraftKings, for instance, a certain commission takes place based on the total amount of created revenue by this user. Yeah, so that's an ongoing source, and that's the reason why this performance marketing is basically split or separated in non-recurring revenue and recurring revenue. So non-recurring is this CPA, cost per acquisition, so their fee what they take, and this recurring is this ongoing one, this commission based on the turnover created by the users. Then we have subscription. Subscription is primarily OddsJam and Optic Odds. So this new acquired business here where people have subscriptions for half a year, 3 months, 1 year or even more, and they have access to this premium services. The same with this apps like RotoWire. There's as well some payment module option behind it, and yeah, that's of course here with the website as well. Yeah, so this is primarily the subscription business. That's obviously completely recurring. That's a major reason why the management thinks their stock is definitely undervalued at the moment, because it should be a little bit more valuated like a SaaS company, let's say like this, like an IT company with very well calculatable income. Yeah, and then we have advertising and other. So that's again marketing. So that's consisting as well as non-recurring and recurring. So when they're using their platforms and they pop up some ads, for instance, that for instance is this advertising. But as well they're selling their content, especially about sports and fantasy sports. They're selling this content to different kind of providers, and you can see they have the YouTube accounts, and all of this is the reason why they created this advertisement revenue basically. Yeah, and now we check out what is going on here in detail, and you can see performance marketing. I mean, it is the core business, 60% compared to 24%. Yeah, so we want to see it's growing, and actually you can see, I mean, past quarter, a year-on-year growth, so Q1 2025 compared to Q1 2024, just or like 10%. It's not that bad actually, 10%, and now just 3%. Yeah, I mean, again, we need to consider that what is the reason for it? What is the reason? And you can see here, for instance, I mean, it jumped from Q2 2023 to Q4 2023 very strongly, and then compared Q1 2024 was a quite weak quarter. Yeah, and obviously then it's a bit easier to achieve good growth numbers year on year, Q1 to Q1. Yeah, it was already slightly better in Q2. Yeah, you can see it. So I mean, however, it's still 3%. It's not satisfying. Not covering my expectations, honestly, especially talking about the core business. I mean, there is a reason why they're acquiring that much, especially now out of their core business, performance marketing. And I think I already read something that there might be a reason because of Google algorithms, this kind of stuff. Yeah, okay, might be the case, is likely the case. AI is a big threat, a big concern for this business here, for me as well. Biggest concern for sure. I mean, when you enter in Google search, for instance, online casino, they always, Gemini, the AI of Google, will provide you some kind of summary and whatsoever. And I mean, this gambling.com business is just working if you click on their websites and you use their link and their bonus code to join the platform as a user later on, to make the CPA fee and this recurring fee, this revenue share model happen. Yeah? And so AI is definitely a threat, and I assume that is one reason. Comparing or considering this, it might be not actually that bad. Yeah, I mean, I think it's definitely a Q2. It's definitely a Q2 record quarter, not record quarter overall, as you can see. But for the seasonality, it seems to be fine. Yeah, but however, not enough growth for me. Even though that's not the complete, gambling.com is for me not the pure revenue growth play. Profit growth is here important as well. However, wait, I need to readjust a bit the camera. Okay, now I think it's better. However, for me it's simply not enough, and I rate it negative. Now let's take a look at subscription. And I mean, yes, those numbers look simply crazy year on year, 405%, 415%. Yeah, why? Again, I mean, you can see roughly, or let's see, best is when you compare Q4 2024 to Q1 2025. This almost 8 million difference, or let's say 7.5, is primarily resulting based out of the old odds holding, so odds and optic odds acquisition. Yeah, and so it's really hard to to check what is going on here, but I mean, it seems like I mean, I like it gives stability. It gives for sure stability. It's for sure a growth factor. It's for sure getting stronger. I mean, let me check quickly how much Q on Q, like 1%. Okay, that's honestly not that much. Yeah, maybe guys, because it's really hard to evaluate, I already want to grant a positive rating, but in this case, I think, I mean, 10 million is 10 million. Yeah, it's a very solid number, and I assume it's developing in a positive way. However, not crazy positive and not crazy negative, so I think neutral is very fair. And let's see what is going on with the advertisement. And we had past quarter year-on-year growth 29%. And again, consider it might be highly affected by some acquisitions. Yeah? So those numbers at gambling.com are sometimes a bit tricky to read. And one number never speaks the truth, not at this company, not at others, but especially not at gambling.com actually. So we have still 6% growth, obviously not that much like before. Let's see what happened here. I mean, it had quite a good jump. So before it always developed by 400,000, now 300,000, 350,000. And now the jump 1 year ago from Q1 to Q2 2024 was roughly 500,000. Yeah, so seemed like quite a strong quarter. Yeah, yeah, but still lower than past quarter. Actually, don't like to see. That was not the case 1 year ago, as you can see here. Even though it might be an effect resulting out of an acquisition, who knows? I assume it's likely, kind of likely. However, I would love to see that the advertising revenue increase a bit stronger, and that's as well not the case, so I rated negative. Let's check out what is going on with casino, sports and others. Others is poker and bingo basically, so I think that's quite self-explaining. And let's see what is going on with the iGaming, the online gambling. And you can see 24% past year growth now, 7.5%. Still growing, but not that heavily. Not that heavily. And that's again basically primarily the core business. Yeah, you can see it's the lowest one in the past 4 quarters. Again for me negative. Damn, would love to see a different one, but it is how it is. Let's see what is going on the sports betting side of life. And you can see here this optic odds business, roughly 6 million revenue out of it is added to this one. So that's a big impact, this optic holdings business. And you can see past quarter it was already 70%, roughly 70%, now 85%, so it's re-accelerating. And it's a bit like before, I mean, definitely not negative. I like that it's even accelerating further compared to past quarter. On the other hand, not crazy positive results, yeah, so neutral rating is, I think, definitely enough. Let's check out what is going on with poker and bingo. I mean, it's 2% of the revenue pie. Definitely it's not something essential. However, it's still growing very strongly, 150% past quarter now, 150% again. I like this very much because I think the growth number is very high. Definitely because of this 2% share, definitely by far the lowest relevant or the less relevant KPI here, but I rated positive at least. And let's see what's going on in different regions, starting with North America. I mean, we had and US getting more and more relevant. I think online gambling is allowed, regulated since I think 2006 or something like this in the US, and it's growing since then. And you can see, I mean, past quarter 42% growth, now 56% growth. That looks solid for me, even if it's not higher than the past quarter. Looks good for me, looks promising, re-accelerating. I like to see. Whereby again it will be optic odds in it. Come on, I give it neutral. Neutral is, I think, fine. I don't want to I prefer to give bad rating than positive rating, let's say like this. Let's check what is going on with the crazy UK and Ireland. I mean, it seems like online gambling is really a thing there. And we had past quarter 24% year-on-year growth. This quarter roughly 12% year-on-year growth. On an absolute number, it's almost a record quarter, but actually not really. Here, I think OddsJam doesn't play a big role. It plays one, but not the big one. However, I rate this again negative because the year-on-year growth is definitely not just convincing me that much. Let's see what is going on with other Europe. 16% of the pie and 54% year-on-year growth past quarter, now 12% year-on-year growth. Again, keep in mind these acquisitions might have an impact. However, I stay strict here with my valuation. And this actually is almost, as you can see here, record quarter. That's quite surprising. It's definitely stronger than the past quarter. I mean, therefore, even though 12% looks like way lower growth than year before, but again, keep in mind, Q1 wait, you can't see it, I think. Q1, 3.9 million, and 1 quarter after 2 more millions in, what was it? Other Europe. Yeah, so definitely some acquisition stuff going on. I think that actually looks quite compelling. Not sure if Optic Odds and Odds Gem playing a big role here. I can imagine it might be the case. However, that looks solid for me, and that solid seems for me neutral coloring, which is okay because I have high expectations to the company I'm invested in. Okay, it's okay. Hi MC, thank you very much for joining the stream. You used the chat function, guys. Do it like him or like her, and yeah, be active there as well. I love this very much. Otherwise, I feel very lonely during the streams, and that's actually not the reason why I'm doing the streams. Okay, and what are you mentioning is great analysis. Seasonality of sports betting needs to be taken into account. NFL and soccer seasons begin over next course of the next month, and that is when they usually see most new customers. True, good point, collega. I think next weekend, for instance, in Germany, Bundesliga, first Bundesliga, erste Bundesliga, will restart the new season. And yeah, actually same with NFL, not particularly on this weekend, but yeah, definitely a huge aspect for sure when we talk about sports betting. Yes, thank you so much, MC, for this comment. That's definitely very valuable. Let's finish the regional screening, and we can see here rest of the world. And I mean, rest of the world is just 7%. However, you can see past quarter 63% year-on-year growth, now 14%. We will likely again see this big jump, Q1 to Q2. You can see it here, big jump. I mean, from quite a big jump, let's say like this. And I think then considering this, 14% seems solid, so I take this neutral. And so, I mean, we have a mixed feeling about this different sources of revenue. I mean, overall, we give it already a rating here, but digging a bit deeper into this whole, what we did in the past minutes, you can see that it really depends. It seems like online gambling is a little bit suffering for whatever reason. I think we will check this out later. Actually, I have in 30 minutes the next stream with new holding, new bank from Brazil, but I will postpone it to a later time because I want to finish this here on a good level. Wait, maybe let me take care of this quickly right now. Just a moment, please. But then afterwards we have a bit more time to invest into screening the results of gambling.com. So editing the video, and here it is. So let us do like this. Hopefully it's sufficient. I see. Yeah, I think so. Might be good. Okay, so 20 more minutes. Easy by doing this. Okay, let's go back to the results. Here we are. And now we check the core number, which is actually existing in terms of at least the performance marketing. And these are the NDC, so the new depositing customers. And what we have here, not compelling again. It is how it is, but you can see past quarter year-on-year growth, 29%. And this quarter, no growth. Yeah, so actually the same number of new depositing customers like 1 year ago. So honestly, guys, for those of you who follow me a little bit longer, I was invested in a company which called Period Network from Israel, which was as well a marketing company, a performance marketing company, and I see some kind of similarities, yeah. Just really the tip of the iceberg. I need to really be careful, yeah, because a lot of times management will not, basically open the full books, tell the full truth about if the core business on which a lot is relying on is going down, you know. And for this period, actually, network for this company I was invested in, it was they have been heavily rely on contracts with Microsoft and Microsoft search engine Bing, and from one day to another, and management always told, we are convinced we will extend the partnership with Microsoft. We have good conditions, good partnership, good relationship. And from one day to another, it was cancelled, and the absolute major source of revenue and income, of profit, was not existing anymore. And this is, of course, kind of a similar risk at gambling.com. And for us as shareholders, it's important they create positive intention on the stock market, and they convince the shareholders, the potential investors, that there is definitely some kind of reliable, secured potential existing. Yeah? And if this kind of concerns are existing with AI and Google and this kind of stuff, it's not affecting just gambling.com. You know as well that there are these rumors, these doubts existing in regard of Google, if they still keep their high level of income resulting out of the search business. Yeah. Or Alphabet, actually. And gambling.com is definitely relying on those search results in terms of performance marketing and in terms of new depositing customers. And again, you can see not crazy compelling. I think, it's almost the weakest one. It's almost the weakest one in the past 8 quarters. The third weakest one, of the past 8 quarters. Not nice. I think that's not even seasonality or whatsoever. That's really not that nice, honestly, I need to say. However, let's go on and check out what is going on with the gross profit and gross profit margin. And that at least doesn't look that bad, but again, for me more important is how efficient they are here. And you can see the gross profit margin is definitely going down. Past quarter it increased by roughly 5%, now it went down by roughly 7%. Why? Very likely again because of acquisitions, because of odd holdings. I assume that odd holdings don't have this high gross profit margins like the performance marketing business. And as long as performance marketing business getting weaker and actually subscriptions, so the RotoWire, the odds business is getting stronger, profit margin will definitely suffer underneath this development. It's not surprising, however, it is negative, and we don't need to invest too much time here to grant a negative rating. And now let's see and take a look on the cost side, on the expenditure side. We have here different expenses, general, administrative. Here I think, definitely some synergies existing potentially in the future. As soon as you acquire a company, you might need a complete independently working, for instance, accounting department. Because you already have one, maybe you need just 1 or 2 new staff members, and you can still take care of the bills for your staff, for the people who are employed. But this takes a bit time to dig these synergies, And you can see here, past quarter it already went up 0.2%. This in ratio of revenue is not the absolute number, but however, it was more or less stable. And this quarter it went up by 3.4%. I assume that's again resulting out of the Optic Holdings acquisition, however, negative. Now we have here sales and marketing. And we don't want to see, of course, it's getting up, but it already went up past quarter by 10%, now by roughly 9%. Not that much like past quarter, but again, still going up. I assume again it's because of this optic impact, however negative. And now we have research and development. I think they call it technology. I mean, you need to know that behind all of these websites, definitely some algorithms are working behind optic platform, odds jam, this kind of stuff, or if they provide the data for the online betting platforms through optic odds. Definitely some technology is required, and of course it needs an ongoing investments in it to stay up to date. So we can see past quarter it was up already by 4%, it's now was up by 7%. Yeah, so that's definitely not that nice, but again I assume it's heavily resulting out of optic odds. Who knows? We will read a moment into the press release right after. I think I read already something that they're working on the algorithms, I assume as well, for the performance marketing in terms of the Google search results, but we will check this out in a moment. However, we have operating expenses, share of revenue, and you can see past quarter it already went up 14%, now 19%. Look, it was in the 60s, and that's the price you pay if you do this kind of acquisitions. I mean, you can see here Optic Holdings wasn't acquired, here it was acquired, up by 11%. That hits hard for sure. I mean, before it was always in the 60s, now it is in the 70s, and already rate straight through to 80%. Yeah, so seems like costs are hitting in more heavy than expected. Yeah, and I mean, not surprising if all of this is red. The bottom line is red as well. Now we check out what is going on with the profitability. We have here the adjusted EBITDA margin. I think adjusted EBITDA margin, I'm not the biggest fan. However, or at least of the word in general adjusted, but I think they're considering this kind of acquisitions and this kind of stuff, or let's say one-time effects. And so in this case of gambling.com, I assume it's just very reasonable to work with the adjusted KPIs in terms of profit. And not surprising, I mean, if the costs go up, that the profitability is not that great anymore. And you can see, I mean, it went up past quarter by 5% and now down by minus 4%. Definitely not nice, definitely negative, but still not a bad adjusted EBITDA margin for sure, actually. But we are experienced, and we are in the past quarters better ones. And now let's check out what is going on with the adjusted net income margin. And I think, where is it working? Where is it? D20. Oh, should be like this. One moment. So now it's referring to the right box, and we can go back to it, and you can see it's actually not that bad. That's actually not that bad. And I mean, I'm more a fan of net income than adjusted EBITDA. I think it's more transparent, more clear, more what you want to see, net income, of course. And even though it's adjusted, however, so we had past quarter 8% growth, and we have now another 8% growth. And you can see, I mean, it was in the 20s, went up, and yes, it was higher, maybe as well because of seasonality, but it's still 32%. That actually looks for me quite solid. At least something what I can leave a neutral rating. And now let's check out what is we got on with their debt situation. I mean, a lot of acquisitions of them are, even if they are working very heavily in terms of profitability, the acquisitions are levered by debt. They're using debt for it. You see, I mean, they have assets, which is positive, but as well they have these liabilities, so current ones and a little bit non-current ones, so on a longer term and on a shorter term. And I created 2 KPIs to just check out, okay, good, how much of the current liabilities is covered by current assets. That's the short-term debt ratio. And then I want to see, okay, how strongly are the current assets covering both of the liabilities, the short and the long-term ones. Yeah, and here I want to see a number up 100%, and here I want to see a number up 50%. And you can see on the first glance it's definitely lower, and even more worse, it's lower than the past quarter. I mean, it's not that heavily surprising. I mean, they have this debt because of the acquisitions. Again, I think Optic Holdings was roughly 120 million, so not surprising. However, I mean, running out of money is definitely a relevant case. And I mean, think about this risk that, okay, the core business is highly depending on Google search and on performance marketing. And if this, because of what kind of AI reason, I mean, it would be nonsense to do this, because Google is existing because of this, that people click on their websites, which getting displayed by their search engine. That's how they make their advertisement money, at least. Yeah, I mean, of course, they have cloud business as well, and YouTube, this kind of stuff. But I mean, one of the major income sources, definitely search business. And I don't think they want to change this that heavily. So somehow gambling.com is a bit secured. But who knows? If they find a good way to do this for Gemini, showing AI results and still making money, and maybe gambling.com is not participating by this approach, and gambling.com has still a high level of debt, that might be a very serious situation. Yeah. Okay. However, let's see what is going on. I mean, it went already down past quarter by 70%, now by 40%. You can see it was definitely higher. Now they're really running on a high level of debt. It's okay for me. It's okay for me. I mean, I'm invested with 10 or 15% of my portfolio, and if I lose all of this, not a nice feeling, but part of the game, let's say it like this. However, that is definitely negative. Yeah, again, I want to see 100%. So, in best case, that the current assets cover the current liabilities, but doesn't seem to be the case. I still hope they know what they are doing. I'm quite confident they know, actually. And now we have here this, again, current assets should cover current liabilities and non-current liabilities. Of course, that's a little bit more difficult, and if they even can't cover the current liabilities, it's very likely they can't cover even more, and that's the case. I mean, it went down already past quarter, year on year. Oh, what did I do? Wait, so like this. But yeah, now it's really down, really down. We are far away of the level of current assets in terms of certain ratio to liabilities, to debt. Far different level, guys, compared to 2023. And even 2024 Q1, I think it is. Yes. So definitely negative as well. And now let's check one of the last numbers for those company-specific data. And we have here the stock-based compensation share. And this is something what shows shareholder valuation and orientation. And we want to see it's getting low, because if they dilute the shares, granting more shares to the staff, for instance, instead of regular monetary salary, that dilutes our shares and makes or result in that our shares are not that much worth anymore. And you can see, I mean, it went up past quarter 0.7%, now it went down 0.3%, but it's still a high number. However, I mean, it seems like a high number, but you can see, yes, higher than the past 4 quarters or past 3 quarters, but compared to 1 year ago, it's again lower. Yeah, so actually not that crazy negative, for sure not. And 5% is an okay number. I mean, compared to Central One, the cyber security company I'm invested in as well, I think it's more than 30%. 30%. Yeah, so yeah, for me it's neutral. Actually, is it neutral? Yeah, because of year-on-year growth is negative, that's neutral, even though it's higher than the past quarter. Okay, however, I mean, let's fetch this together. I mean, we have here revenue and EPS. EPS strong, revenue not really weak, but not strong for sure, not crazy strong. So that's a neutral rating. Then we have here, yeah, poker and bingo is working well, guys. Congratulations. But everything else is more or less red and yellow. And honestly, if I see that much negative color, that much red, it is negative for me. Yeah, I don't need to put it on a scale and really think about it this weeks. Yeah, so we have here a neutral one and we have here a negative one. Yeah, so far not good, guys, not good. I think past quarter rating, so Q1 earnings results rating was neutral, so now negative, not nice. However, let's go on and check out what is with the full year guidance. And I was a bit surprised because I've read that they raised their revenue target. Was before mid number was 172 million and now it's 173 million. So actually that is positive. Yeah, that is positive without a doubt, because in the end every positive adjustment of a guidance is nice. It's really nice, I think. And so even though it's just 1 million, maybe it's just a trick, but it is okay for me. Almost neutral, but they accelerated and push it up, and that is for me again. That's for me positive. However, now we check out what's going on with the adjusted EBITDA, and I mean before it was 68 million and now it's 63 million. That is not nice. That is not nice, guys. I don't want to see this, and that's definitely big red. I mean, I would definitely prefer if they keep their results constant and steady, their outlook, their forecast, their guidance, then going with one up and one down. I don't think that's the market will appreciate this that much, especially it's just up 1 million in revenue, but down by roughly 10% of adjusted EBITDA. Guys, not that nice. And now we have adjusted EBITDA odds jam, and I think they're not even stating it. Let me check out, and I think we can immediately see some further information to it. I read it already before. I think they mentioned that now even Missouri is considered. We'll check this out in a moment, but let me see if it's large enough for you guys. Looks good. Okay, we have here the outlook. Okay, so you see they raising it a bit and lowering the profit side. Okay, and you can see the increase of full year revenue range reflects the expected 4 months, September, October, November, December, 4 months of Spotlight Vegas and the launch of sports betting in Missouri in December. So, I mean, it's just 1 month, and who knows on which day in December, and I'm not sure how much sport is going on in December actually. At least I know from soccer they do a break at the end of the year, and maybe the month is only consisting out of 20 days and not 30 days. However, I was thinking, okay, what is Spotlight Vegas? And Spotlight Vegas I will talk about this in a moment, but it's a new acquisition, what they mentioned at the beginning. I will talk about this in a moment. So, but basically they just raising the bar of revenue because of this acquisition and because now Missouri contributes to the results. And they always mentioned in the past it's not considering Missouri. Now it's considering Missouri. So without Missouri, without Spotlight Vegas, they would actually put down the revenue guidance, if I am not mistaken. Not nice. Okay. However, let's see what is going on with the profitability. Partially offset by currently weaker search engine rankings following Google's core algorithm updates. Okay, there are still some algorithm updates going on, and I think gambling.com, I mean, it was already the case, I think, in 2024, and still gambling.com is fighting with it, basically providing good results and maybe investing because of this more in research and development than expected. Year-on-year growth 46%. Okay, the updated full year adjusted EBITDA guidance range include the effect of higher than previously forecasted cost for sales for company's marketing business. For sales for the company's marketing business. Okay. And strategic investments into new digital marketing channels and monetization models, as well as no contributions from Spotlight Vegas this year. Yeah. However, I mean, they definitely lowered it. Not nice. That is not nice. And now I would say, I mean, normally I first cover the Excel sheet and give a rating, but this time, I mean, we have nothing for OddsJam, I think. Let me check. In terms of the outlook. No. Okay. I hope at least. I hope they keep it steady and constant. So I grind a neutral rating. I mean, keep in mind, without this Missouri stuff, this Spotlights Vegas stuff, I expect they would lower revenue. So actually I make it neutral. And adjusted EBITDA, they readjusted it negatively. No information about OddsJam, so full year guidance as well negative. And I mean, now it's the time I give my valuation, my final verdict, and I mean, you can see again, top line, bottom line growth is a mix out of neutral and negative, positive and negative. Then we have all these details, and this as well is very negative, so negative. So we are now more on the negative side. And full year guidance, and you know, when we investors, we love the future, not the present. Negative as well. So guys, unfortunately, I mean, again, past quarter it was neutral, but this time I think I have no other choice than granting a negative rating. I'm sorry, boys and girls, but that's just my view on it, even though I'm invested as well in it and have high hopes. But again, let's check it together if there are some interesting details behind it. Yeah, not all details, but at least superficial ones. Okay, they're starting this. Okay, wait, they're starting already here. Enters into definitive agreement to acquire Las Vegas-focused booking platform Spotlight Vegas. Expand share, we will talk about this in a moment. Expand share buyback authorization from 10 million to 20 million. Okay, I mean, they don't have that much money and try to acquire shares and still increasing stock-based compensation, share-based compensation to the staff, maybe to use those shares. Yeah, so that doesn't mean anything to me, honestly, guys, and I don't think the market is appreciating that much this statement as well. However, let's see what they're writing. And guys, very important is that you listen to the call or read the transcript. I always read the transcript a few days after. That might be bring some light into darkness. First, so trends. First is an accelerating diversification away from the traditional search channel in favor of a more omni-channel approach, in particular with the marketing business. Omni-channel, okay. Second is an accelerating diversification to revenue models beyond marketing, including sports data services. Yeah, okay, that's this odds holdings case, what we're always talking about. Cash flow is nice, okay. The performance was driven by more and growing contributions from channels other than search than ever before. What does this mean? I mean, search, yes, I understand, not Google search results. But do they try to create hope, or is there definitely some hope in the room for future business? And you can see that here, this 25% of revenue, sports betting revenue. Sports betting actually is not that high profit than I think iGaming revenue, so this performance marketing revenue, that's what you need to consider as well. But at least this OddsJam, it contributes or adds 25% of the revenue, let's say, like this, taking care of 25% of the revenue just by one acquisition. Yeah, we have here this refreshed RotorWire brand, you know, this kind of stuff, and of course this odds stuff. And I mean, if you invested for this gambling.com stuff here, for this comparison stuff and services, that's getting less and less important for this company. At least they try to keep it like this, because I think as well they are concerned about just depending all the future of this one-trick pony, let's say, like this. Yeah, they acquired Spotlight Vegas to reach their goal of 100 million in adjusted EBITDA soon. And I mean, they try to acquire, I think, on average 1 till 2 companies per year. So that is the first one. Optic Holdings was more or less an acquisition past year, I think December. Even if it went fully active and relevant this year, but I think you can count it to 2024. And yeah, I think this Spotlight Vegas is the first one for 2025, but not as close, as large as this Optic Holdings acquisition. On the other hand, it's just reasonable because they would run out of money. The acquisition of Spotlight Vegas adds a complementary new business which helps consumers access experiences and further diversifies our source of revenue cash flow with a new set of clients, including entertainment venues and a multitude of land-based casinos. We are well positioned for continued growth as reflected. Okay, and now is the time, I think, to take a look at what is going on. What is Spotlight Vegas? What is this new acquisition about? And you can see it here. I mean, you can see here like shows like in the Sphere, this big screen bubble, ball, dome, however you want to call it, attractions, different attractions, shark reef aquarium, all kind of different kind of attractions with kind of discounts. Okay. A calendar with different stuff, hot deals, trending shows, David Copperfield in the house, yeah. Cirque du Soleil, I can't believe it. So I think it's very quickly clear what you do here on this website. I mean, if you want to do something in Las Vegas, you search for, maybe we can do this together. Activities, booking, activities, Las Vegas. Let's see if it's come. I mean, yes, there's booking.com, there's Get Your Guide. I mean, we are in Germany, maybe that's not the case in your country. Not sure if other websites are somehow related to this Spotlight Vegas, but you can see, I can't see any Spotlight Vegas. Where's Spotlight Vegas? Oh guys, attraction tickets, visit Las Vegas again. Not sure on which kind of page I need to go to find the Spotlight Vegas. Maybe it's the reason why I'm because I'm in Germany located. However, and so I mean, therefore I checked, is Spotlight Vegas legit? Actually, when I add Spotlight Vegas or I enter Spotlight Vegas at Google search, it automatically suggests to add legit. And might be the case. I mean, when we see Trustpilot, not sure if you know this platform, but you see different reviews about different services and products and this kind of stuff and providers. Doesn't look that crazy good. We can check this out. We have TripAdvisor. We have some Reddit stuff. It seems to be legit, but there's not so much going on in Spotlight Vegas legend. Ich buy Spotlight. Okay, but let's see what's going on with the reviews. I hope there's some text to it. Not informed the gate, open and close. Oh, that's not nice. That's not nice. They canceled the show ticket but didn't give back the service fees. We ended up with a that's not nice. Do not use under any circumstance bought the ticket for a tribute act and turned up and was completely different artist to the one advertised. Yeah, you want to go to Cirque du Soleil and you get David Copperfield. That's sometimes, like with Forrest Gump, you get your box of chocolate. You never know what you get. As well with Spotlight Vegas. Seems at least the case based on Steve Kelly's review here. Crazy stuff. Yeah, well, man, I'm sorry. I don't want to laugh about it, but I have no other choice. So, I mean, if you ask me, it doesn't look like a big number. How can I see this shit? I did this full US did not deliver the tickets bought from other. What the fuck is going on? Seems the scam. Before it worked great for me, tickets were legit. Okay. I guess to buy tickets is fair. I saved about $20 per ticket. I bought 9 tickets. The tickets were emailed to me right away. They had QR codes. We used them this past weekend without any issues. At least something positive. Yeah, I'm not sure what is the truth or not. I don't want to talk bad about this. You can check this out by yourself. Yeah, but again, Spotlight Vegas, new acquisition of gambling.com, very exotic one. Yes, maybe they lead some people as well to casinos. Maybe it's really good working. I have really... Let's see what is going on here. If we can get some further information about this, about maybe other websites which are commission rate 7%, 11%. Okay, they make some money. What series is guaranteed low price? Wide variety of offerings, an easy use platform. Lower price mean higher purchase rates. Our average sales amount is for $300 with orders up to $5,000. Okay. So big orders going on here. People trust them, I assume. Our happy clients. Maybe we would see what is behind it. Check the earnings call. You get more information for sure. Because here they're stating like Apple, like Google, like Meta, other clients. Maybe it's not like only B2B, it's as B2C, it's as well B2B business, yeah, business to business. I'm not 100% sure, man. Not sure about this acquisition. Okay, but maybe it's a banger. I have no clue actually, guys. I have no information. Don't know what was the cost of it. But yeah, let's see quickly what is going on here with the aftermarket price. Most of the time it's not working very well. I mean, at least it's green. You can see here, that's good. It's 12% down. I understand this, guys. If that's correct, I understand this. Because again, Outlook getting crushed. I rate it as well negative. This new acquisition seems awkward, even though they spotlight Vegas very heavily in the earnings result sheet. Performance marketing seems very fragile on a certain level. I even need to think about holding this company, honestly, guys. I didn't expect this kind of results. I definitely need to listen to the call. That is for sure. I need those informations, but definitely not convinced by these results. Yes. Okay, and let's check out if there are already some comments existing. Yes. Let's check out what is going on with the comments. Let's see first what is going on at Seeking Alpha. Okay, just the rough information. More interesting are the comments. And I don't think the people are as amused. Okay, first post here, non-GAAP earnings. Okay, he's just adding the information. This guy is writing, oof, that's not great at first glance due to acquisitions. Then the other one is writing, accounting practices for the acquisitions, not a great way to judge the business. Overall, the quarter was good, and 7 people liking this. Not sure about this. Would love it would be a great quarter, but really not sure. The EBITDA guidance slightly slower is the other issue, but weren't dropped this much. Time to change your name. I'm buying more gambling.com. Time in the stock over time. Mingle stock. Okay, yeah. A Buffett quote. Probably analysts were expecting a higher revenue beat and upwards guide. Not sure if that's the case. It's more like the guidance was lowered, I think, if I'm not mistaken. Profit-wise and as well revenue-wise, if they would not consider Spotlight Vegas and Missouri. And again, consider or keep in mind that that performance marketing might not develop that great. Not really heavily negatively, but it seems like really it's not like growing heavily, crazy. I mean, if they would not acquire, for instance, Optic Holdings, their organic growth, I think it's not convincing at all, actually, my opinion. Yes, profit-wise it would look better. Yes, in terms of liquidity, so assets compared to liabilities would look better, but yeah, it is how it is. Another one is writing, you're rolling the dice, buying more. It's an extreme drop, already dropped a lot since the last quarter. I see gamb as a company to bet on, pun intended. And Mr. C. Fox writing, I only realized my pun after I wrote it, but I do agree, I have a feeling this is a good opportunity. I bought almost 20% more, now I will hold. But this price is dislocated. I would say maybe I can see the risk yet, but can't see the risk yet. But for now, I like the risk reward for long term. I can definitely see the risk. Even though I'm invested, I can definitely see the risk. And I'm not that great in seeing risks. I'm not a super intellectual, high-skilled, qualified, intelligent analyst. I'm just a private person, and I can see the risk. Yeah. What is he quoting or mentioning? Operating cash flow grew from 0.2 million to 9.4 million. Free cash flow increased 36% to 8.2 million, reflecting strong cash conversion and adjusted EBITDA growth. Yeah, all good, but at the end they lowered the outlook for this year. Yeah, by roughly 10%. Good, but if the outlook was lowered, I don't like. And now BTW3006 is writing, the post-market drop makes no sense. The fair value adjustments clouds the overall picture of what gamb achieved in Q2. Very solid quarter, long gamb. I'm not sure, man. I'm not sure. Again, yes, green numbers. But for me, it's not a positive quarter. No. Way too many red flags. And it's even that heavily negative that I think about selling my shares. Honestly. I definitely sleep over it. Tomorrow's Friday and I can check it maybe on the weekend, even though I'm quite busy this weekend. However, I will definitely invest a few minutes at least in thinking about gambling.com. However, it dropped already heavily. Let's see what I will do. I mean, we talk about small companies, growth companies, not heavily established companies, even though this company is existing since roughly 20 years. It's a certain level of volatility is very regular, but it's not about the price for me, how it's developing, not at all. It's more about, okay, what is going on? What is going on with the results here? And yes, maybe even I add more shares. I will see, but I assume I will do nothing and read the transcript of the webcast of the call by the management, figuring out what is going on with Spotlight Vegas, what is going on with the guidance adjustment, what is going on with all of this, what is going on with performance marketing, and I think that's the most crucial aspect for me. And Alphabet and Google search results and algorithms, that's most important for me. Maybe they even add some color in terms of the debt ratio. I don't think so that will be the case, but who knows. Let's see. But that was not the most convincing quarter for me, I can say. Check one more time. I just want to see how it looks. We'll compare it. I mean, don't forget they invest, they purchase this kind of numbers by acquisitions. Yeah, it's a lot of this is not organic growth. So yes, on first glance it looks incredible if they achieve almost 100% more adjusted EBITDA or adjusted net income. But again, consider acquisitions are a major reason for this. 25% revenue growth, roughly. Again, acquisitions is a big part of it. Yeah. But on the other hand, that doesn't have to be negative as well. Okay, guys, that's it so far. Let's check out what is the future in terms of this earnings season, at least in terms of what I'm backing here. And you can see, I mean, I'm investing in 5 companies. I'm backing all earnings result of these 5 companies, at least as long as I'm available and capable. And so actually here you can see another one will follow up in honestly 5 minutes, but I will set back the call to, I think, 15 minutes. In 15 minutes I will go live with it, because I just need to take a bit time to drink some water and screen the results of new digital bank out of Brazil. So if you enjoyed this stream, feel free to join the other one in a few minutes. And then last earnings results I will cover will be the cybersecurity company SentinelOne out of the US. End of August, 28th of August, the results will get released. So feel free to join here as well. And yes, guys, I mean, if you like what you have seen, feel free to like the stream. I would highly appreciate and would be very happy if you subscribe to the YouTube channel and follow me on Instagram. That always gives me some positive vibes, positive energy and emotions. Nothing costs, no cost for you, but value for me at least, and value for you hopefully at least as well, because you're not missing anything anymore. As well, my portfolio updates. As always at the end, quick disclaimer one more time: it was no financial advice, no consultation whatsoever, no guarantee for correctness of the provided data. Make sure you do your own research, your own due diligence, read the results, listen to the calls, read the transcripts, make an own verdict, and yeah, invest how you think it's the best for you, for your situation. And as always, last words: more important than money, more important than the stock market is for sure your health and your social environment. So take care of your beloved ones, take care of yourself, eat good nutrition, take care, not gamble too much or not gamble at all, guys. I don't gamble. Maybe on a horse race or something like this, but I'm not maybe when I play poker, okay, forget what I've mentioned. But I'm not a big gambler outside of the stock market, let's say like this. And there I would call it as well investing. But however, take care to not getting addicted to gambling. It's very serious addiction. And yes, take care of yourself. And see you next time, maybe in a few moments. If not, latest next quarter results likely of gambling.com. Cheers and bye-bye.
A sense of capital.